Hey guys, good afternoon, everybody. Today's Monday, May 1st. It is 4:59 right now. Our scheduled mentoring sessions for 5 o'clock. So I'm going to go ahead and set up this room real quick, and then we will get started shortly. If you guys have any questions, feel free to put them in the chat. Otherwise, we will cover all questions in a few moments. Just got a couple things here to update. All right, looks good. Looks good. And we are good to go. Let me get this link sent out to you guys here in the premium. Perfect. Links are getting sent out. All right, here we go. So I got a few moments for people to make their way in. All right, perfect. All right, so I'll get a few moments for people to join in, guys. If you guys have any questions, feel free to put your questions in the chat. Today is Monday, May 1st. It is 5:01 right now. Our scheduled mentoring sessions for 5 o'clock. So we are ready to hit the ground running. So if you guys have any questions, feel free to put your questions in the chat, and then we will cover whatever questions you guys have. I think one of the main things we'll be covering today is probably the liquidity push. This is a strategy that I don't typically, the liquidity push is not typically a strategy that I teach very many people. I usually show people how it's done, and then typically the people who are more advanced are able to apply it. But this is a more advanced way of trading. So I'll show you guys how I mark up liquidity. And yeah, if there's any other questions, feel free to just drop them in the chat, and we'll get started with this mentoring session. I don't really have anything scheduled for today aside from these liquidity pushes, for the most part. But I'll review again, what we'll be covering or what we'll be doing pretty much every live session. So as you guys can see over here, I kind of split up my charts into different types of charts. So the main chart here is still going to be the same as we've always done. So for the main chart here, we'll be looking for high-low momentum scalp strategies, or high-low momentum scalps. So basically this is going to be sorry, this is the wrong one. That's why I read it weird. Yeah, so for this right here, on the main chart, we'll mainly be looking for high-low momentum scalps. And then for the chart on the left, we'll be looking for possible SR ejection scalp entries. We can cover entries for this as well, if you guys like. So we'll have a couple charts here. We'll have one chart for SR ejection scalps. The reason why we'll be looking for this is because we're entering summer. If you guys are familiar with the seasons, typically the market starts to range a lot more and consolidate during the summer as volatility dies down. So one of the main strategies that we typically apply during those types of market conditions are the SR ejection scalp. So if you guys want to see this, or explanations or demonstrations on how they're applied, feel free to let me know, and we'll cover that. I don't really have a schedule for today. I mean, I'm pretty much just covering things that I'm personally going to be looking out for, and other questions that I've had regarding, the strategies and specific things that I apply. So I'll have a separate chart for the SR ejection strategy. The reason for the separate chart is because if you guys turn on the SR indicator, you guys will see that there's a ton of zones on the chart. So it's going to make the chart a bit messy. And that's why we need to have a separate chart for this one specifically. For the main chart, we're going to be looking for high-low momentum scalps. For the clean chart, as you guys know, this is just going to be clean. It's just going to be marking up open and close price. And then it's pretty much going to be clean for the most part. So clean chart, main chart for high-low momentum scalp, SR ejection scalp chart, and then the liquidity pushes over here as well. So yeah, I'll be covering that, Tom. That's the main topic for today. If you guys have any other questions, feel free to put them in the chat. Otherwise, I mean, we'll go over that here. Tom, you're not familiar with the strategy because you're kind of new, but I used to apply this strategy a lot in the past. This is kind of what Kevin does. So if you guys have seen Kevin's profits, he's been in the group for like, I think 2 years now. If you guys remembered Kevin, he has like crazy profits every day. He's basically applying this strategy that I apply. I taught you guys this a long time ago, like about a year, 2 years ago. And this is pretty much how like Kevin locks in like some massive profits. So let me just pull up Kevin's chat. So like, some days he'll have like 59,000 because he just takes like these smaller trades and they just add up. 53,000 right here, 58,000. He just has these really crazy days because he takes these trades. This strategy is a very risky strategy. When Kevin applies it, he actually doesn't really use a stop loss. So I don't really recommend that to anybody, but Kevin knows what he's doing and he knows how to manage his risk. If he goes too deep in a drawdown, he'll just pull out. And then he'll just call it a day. Typically a lot of people aren't able to trade this way because you have to think very quickly and the entries come up super quick. So I'll show you guys examples of like how I'm able to identify those moves and how they're taken. So let's start off with this here. So basically to identify the liquidity zones or liquidity price points, what I generally do is this is before market open. So 6:30 is market open right here, right? The first thing that I do here is I do a top-down analysis for liquidity zones. So I'll start off with the daily and I'll just clean up the chart here a little bit so that you guys can see things better. I'm just going to take like literally everything off and just leave the high-low indicator on. So what I do here is I identify high lows that have not been tested. The reason why I do that is because typically that's where people place their stop losses, right? They place their stop losses at the previous swings, and that's where liquidity is sitting. Because if their stop losses are sitting there, then that's typically where you're going to get liquidity pushes. So I'm just going to go down here and mark up all of the high lows that have not been tested. So you got one right there, one right there. And I do this every morning before the lives. I haven't done it lately, but I've been doing it more often because it is helpful and useful to identify where people are setting their stop losses. In order to have these high lows identified, you have to make sure that they've been confirmed. So basically, there has to be about like 4 or 5 candles that pass before you mark them up. So for example, right here, there's a high right here that's currently pending on the current candle, but I wouldn't mark that because that right there is still pending. So I wouldn't mark that up. I would mark this one right here because it looks like it's about to create a new one. Scrolling down over here, a couple more down here. And I just go down the list. So this is pretty much all the high lows that have not been tested. The reason why they haven't been tested is because they haven't been touched before, right? You can see there's high lows over here, but you can see that price has already tested it over here, so they're no longer valid. So for example, here, this could be where people place their stop losses, but you can see at this point that they've been tested already. So liquidity was already tested at this area, pushed up a little bit, and then came back down. So if they're tested, they're no longer valid. They're not useful to us because whoever had their stop losses placed there already triggered. So there's no point in following that. Let's go down to the lower time frame. So we'll start off with the daily, go down to the 8-hour. There's no specific time frame that you guys need to mark these up on, but for me personally, I do daily, 8-hour, 4-hour, 2-hour, 1 hour, 30-minute, 15-minute, and 10-minute. So I basically just go down the list. I go down the list from like the daily, and I go half time frame from there. So with that said, we're right here on the 8-hour. Let's see, we got one right here, but it's tested already, so it's no longer valid. We have one right there. And I'm just going through and marking up areas of liquidity so I know where to identify where liquidity is likely to make its stride. All right. And again, guys, this is a more advanced way of trading, so I don't necessarily recommend this for a lot of people in the group. You have to like really know what you're doing to take these types of trades. You can't be greedy. You have to like really be systematic. And you got to be able to get in and out of these trades with ease. Like you can't really think about these moves because it happens so quickly. So here's the 4-hour. Let's go down to the 2-hour. Another one right there, another one right there. Go down to the 1 hour. So this one right here is still pending. I wouldn't take that. It's on a specific candle. See if there's anything else over here. All right, so I've marked up the zones here on the 1 hour. There's obviously nothing else here. Everything else has been tested. Go down to the 30. One right there. 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 Go down to the 15. One right there. One right there. So this isn't really necessary because, price is probably not going to reach down this point, by the end of the session, but I like having it up just to know, just in case price does push that, to some extent, and then you can maybe catch a later liquidity push in the future, because these areas are going to get tested at some point. They're not just going to be there forever, or they're not going to be tested. At some point, they're going to be tested. So it's always key to understand where people are placing their stop losses, whether it get hit today or tomorrow by the end of the week. Eventually, the liquidity is going to get knocked out. And you guys can even test this yourself. You guys can set up like liquidity zones from like the previous week on Sunday or Monday, and then go through the entire week, and you'll probably run into it as we follow through, with the following week. So this is pretty much all of the high lows that have not been tested, from the daily down to the 8 hour, to the 4 hour, to the 2 hour, to the 1 hour, to the 30-minute, 15, 10, and that's pretty much it. I don't go anything lower than the 10 because it's all pretty much noise on the lower time frames. So now that we have this here marked up, I'll go down to the 1 minute. And what I look for is for price to push in that direction. So this is a bare basic way of identifying, this liquidity. So like right here, we have a bullish momentum, right? Let me turn on the pivots. You can see price is attempting to shift to the upside. It was bearish, now shifting to the upside. So we can pretty much assume that price is shifting up if that's the case. And, we have an overall bias for a buy. I do remember from this morning, we did have an overall bias for a buy. Another reason I know that is because majority of my positions this morning were buys, right? We had one sell here, which was a high-low momentum scalp. So quick answer to your question, Barty, is yes, we did take a trade today. That's the one that's posted in the group. So Barty, just make sure that you look at the group here for the trades that are posted, because we have them right here. So this is the one that we took. We took the sell there. That's the only sell I took right here for 3,860. Everything else were buys. So yeah, we did take one entry, but it was just one. Anyways, back to the back to the liquidity push. So here's where the magic happens, basically, guys. So as you guys can see right here, we have a bullish momentum. We know price is going to push up. Closest area of liquidity is going to be this area up here. So as I mentioned before, you guys saw Kevin's profits over here. He trades in the direction of bias, right? So for this day, there was a bullish bias. They're all buys here. And then you can see all his profits are pretty similar. He just goes in whenever he reaches these areas. So typically what I would do here is I would have a pending buy stop right there. And then when price comes up and hits it, it'll pretty much fill my order and go straight to TP, just like how the sell happened earlier this morning. So for example, here market is opening. This is a 629, market opened at 630. You can see here how price spikes up, right? So this is a liquidity push. We already knew this spike up was going to happen because I already had the liquidity marked up right here, right? Had a bunch of liquidity on all the time frames from the daily down to the 10-minute. So right here, pretty much whoever had sells over here just got stopped out, right? Because this is the liquidity that I mentioned. I pretty much knew this was going to happen because I drew this up before the market opened. So this is an example of a liquidity push type entry. So once that happens right there, that's pretty much done with. I mean, you can technically have 4 different entries here. So you have one right here, you could have another one right there, you could have another one right there, and you could have another one right there, right? So my first entry right here, or not this one, but it was a different entry after, was basically this type of entry, liquidity push. Typically, I only take one entry because, I don't want to over leverage. I'm taking a bigger lot size. So one of my liquidity pushes is 3,000 or 4,000 profit. This goes back to what I was telling you, Tom. So Tom, earlier, he was kind of or for the past couple of weeks, he was kind of making statements that like, you can't pass your challenge. You could pass your challenge, right? I took one trade here with the 200 lot size and you make 2,000 per trade. You need like, 5 or 10 trades to pass your challenge. So I kind of want to thank you, Tom, for kind of bugging me about that, because I was using a 100 lot before, but since you kept bugging about that, I wanted to prove to you that it's possible. And I made double my profit in like the past 2 weeks because you kept bugging about like that one specific issue. So I typically don't use a 200 lot, but I wanted to show you that, it's possible. And I did that. I've been using 200 lots for like the past 2 weeks, and I've been making double profit, week over week. So thanks, Tom, for like bugging me about that, because I probably wouldn't have done that. Because I'm a very conservative trader, but I wanted to prove to you that it's possible. And I proved to you I could pass a challenge in a week or 2 weeks right here by doing that, right? So just debunk your argument about like not being able to pass your challenge. Even if I just took one trade a day, I'd still make like 2,000 a day. You guys have seen my profits over here. It's a benefit. Like, this is why sometimes I like when people ask the hard questions, because it kind of motivates me to do better. Because like I've been using 100 lots, like, for the past year. I haven't really changed my lot size. It's been the same for like, let's see. It's been the same since like the first week of April, I think. Yeah. So I've been using like 100 lot here. And then I know Tom kept asking questions about like, how am I going to pass my challenge, right? And I said, it's easy, just increase your lot size. But I never increased my lot size. And then I finally increased my lot size like last week. And, normally I'd be making like a, $2,000 day. Now I've been making like $4,000, $6,000 days because I just doubled my lot size. So thanks, Tom, for the heads up. Because I probably would never, because I'm so conservative where I don't really care about the profits. I just care about winning. But if I'm winning, I might as well just double my lot size. So it's been solid. But yeah, no, definitely. Thanks, Tom, for that. So let me show you another example here. Let's keep going forward. All right. So these areas pretty much got knocked out. Next area of liquidity is going to be, where is the next area of liquidity? I can't. Sorry, I swear there was like another area of liquidity here. All right, I think what I did here was I was waiting for new areas to come up. So looking over here on the 10-minute. All right, so this here hasn't really been established yet. Okay, I think this was what happened here. So let me check the timestamp of my position. So there's one over here at 740 something. I think that was the entry that let me just check my trades. So looking at my trades from today. But you basically get the gist of it, right, Tom? That's pretty much it. You're just marking up the high lows. Typically, I don't mark up new high lows like mid-session, but if I'm given the opportunity, of course, I would look, right? So I think, yeah, the second entry is right here at like, what was it? It was at 743. So I think it was, yeah, it's exactly this one right here. So what I did here was, and I don't usually do this, but there was like opportunity there. So I was kind of just waiting for another liquidity area to get hit. But as you guys can see, there's no liquidity for like another 2,000 pips. Like the next area of liquidity was way up here. So I was like, okay, there's got to be another area of liquidity that's going to come up at some point, right? So if I pull it down right here, you guys can see that it's like 2,500 pips away. There's no way I'm going to get to that point by the end of the live session. So what I did was during the live session, I went to the 10-minute, which is the closest time frame, and only went to that time frame because wait a minute. Why does it look different? I'm a little confused here. $30-minute. Let me go on the higher time frames. I forgot how, I mean, I could probably go back and review my live session, but I'm not going to do that. But I remember I identified a different, I'll just use the 1 minute. Okay, so I typically don't do this, but sometimes it's okay. So what I did here is basically, because my entry was at 743. So I actually took a buy entry right here when price hit liquidity. This isn't necessarily a good liquidity zone though, because it's on the 1 minute time frame. but I don't know what happened during the live session, which made me take the entry, but I did take this entry and that's the one that I took. So you can see the timestamp for my entry was at 7:43 right here. I made 1,620, and then same on my other accounts, 7:43. That was this entry right here. Let me go to the 10-minute. And I can't remember. Okay, so I think, yeah, so Daniel mentioned that it was a high-low scalp. So I think you are, no, actually it's not a high-low scalp because it would have to break and close past it. I think I did mark it up as a liquidity push, but I used the 1 minute here. Gotcha. Okay, yeah. So CJ mentioned, he said, I think you took it because everything was bullish and sentiment was 77%. Yeah, so the reason why I took this entry here, you know what, let me go over here to the 10-minute real quick. I don't know if I took it because it was an SR ejection scalp. Let me check real quick and turn on the SR indicator. I don't know. There was a lot of stuff going on this morning and I kind of was like all over the place. I mean, luckily all of this stuff played out in my favor, but I don't really remember like, you know, why I took certain trades and stuff, which happens. I mean, it happens sometimes, guys. Like sometimes you're just in the zone. Like for me personally, I'm able to see things on the chart without really thinking too much because I've been trading for so long, where for whatever reason, I took the buy here. I'm pretty sure I took it because I identified it as a liquidity area. I'm pretty sure that was the case because what I remember here was that I saw this higher high over here, which established the zone. And then what happened from that point was that I saw price pushing up over here and I knew price was going to push up higher because it would have to go and try to reach the next area of liquidity up there, but it didn't necessarily push that far. But, you know, this is pretty much an example of that again. Let me see if I can find another entry here, Tom, just one more, and then I'll go over the other questions. So I'm going to go over here and clean this up. And let's see if we could find another area of liquidity here that, you know, basically ended up getting hit. I don't know if price even made it this far. Let me see where price ended up going. Okay, so there's another area of liquidity right here that I got hit. This was like super late in the session though. This was at like 11:30. So, all right, let's go down here real quick. Let's see if it gets hit. All right, so liquidity does get hit right there. I don't know if it actually plays out, but so I wouldn't even take trades around this time because it's so late, but let me just mark it up and see if this actually played out. Yeah, it doesn't actually, well, it doesn't play out if your stop loss is 300 pips. So here's the thing that that Kevin does, right? So Kevin typically doesn't, so he's told us that he doesn't really use a stop loss, or if he does, it's like set pretty far out. So I personally, if you were applying this strategy, I would just, because the strategy hits so often, I would have a really wide stop loss. Like I think maybe like a 500 pip stop loss. I know it's a horrible risk to reward ratio, but this strategy like hits like almost every time. So if you wanted to do something like that, you could even do a 1-to-1 if you're going for a bigger push, and you can maybe catch it as it drops it down a little lower. But yeah, this is too late because at this point you're already going into Asia session, and there's just no point in trading around this area. You can see this entry came up around like 11:36. I personally would have stayed away from this area, but so what Kevin does a lot of times is he'll take the entry and he'll hold on to it, and then eventually if it goes back in a profit, like for example here, if he was holding on to this position for like, you know, an hour, he's like, all right, I'm gonna pull out as soon as it goes in a profit. And that's basically what he would do, because you'll see sometimes here that he has like some trades where they're like really small compared to his main trade, which is supposed to be like 1,000. So, but he ends up winning. You know, again, it's not something that I would recommend a lot of people do because this way is very risky. If you guys end up holding on for it for too long and you end up getting margin called out, you can like easily lose all your money in like one trade. So yeah, this strategy is not for the faint of heart. You have to like really understand what the market's doing. And typically if I'm taking these types of trades, I would look for specific entries in just one direction. Let me show you one more example of this before we move forward, because once we are done with this specific strategy, we'll move on to the next one. So I'll show you one from like last week. Let's just go to like, I don't know, let's just go to like Thursday or something. So here's Thursday. I'll do the same thing I just did right now. So this is Thursday from last week. I'll go from the daily and I'll move my way down. So here's the daily right here. Go and zoom out a little bit. Draw my lines over here. All right, so we got these high lows over here that are untested. There, right there. There, right there. Go over to the 8 hour. One right there. Go down to the 4 hour. Go down to the 2 hour. And I'll do this every morning, guys. So don't worry about this. I mean, every morning I'll try to get on the live sessions a bit earlier. I actually used to get on a lot earlier before. So like more recently, I started getting on a little later because I didn't want to just hang around and take risky trades pre-market. But typically I would get on like 30 minutes to an hour earlier before open. And I used to draw these up every morning when we were applying this strategy mainly. The reason why I stopped trading, I stopped doing this strategy on the live is because a lot of people kept blowing accounts because they're getting too greedy. And, you know, my goal is to make sure that you guys stay consistent and profitable. So again, you know, this is one of the more advanced way of trading because it's very subjective. Like this type of trading is very subjective. There's no real strategy to it. I mean, there is strategy to it, but there's no like requirements that you can follow because you have to confirm a lot of things, like look for different patterns, look for overall bias, etc. And that was difficult for a lot of new traders. So that's why I stopped applying this strategy, because we would also get a lot of people who complain too, because they were wondering how everyone's profiting except them. And most of the time is because they weren't following directions. So, you know, in order to save a lot of people who are blowing accounts, you know, I just stopped trading the strategy. The strategy still works very well, though. It's very, very, very lucrative if you can do it properly. Okay, so again, right here, guys, we have all the zones marked up. Market is opening right here at 6:30. You can see here price is pushing down, pushing back up, basically waiting for price to reach, you know, one of these areas. Okay, so right here. So you guys see the zones that I drew up? Again, right here, we have a bullish momentum, so we know price is going up. Basically, what's happening right here is price is attempting to reach this area here to stop everybody out, right? Basically, whoever was chasing sells. I think sentiment was bullish yet on Thursday, because I remember last week we're taking a lot of buys. I could probably pull up the profits from that day too. Let's see, what was I taking on Thursday? So Thursday, April 27th, I was taking buys. So the bias was bullish, right? You can see here I made profit on that day. Made a lot of profit on that day too. So we did pretty good. So basically, again, right here, same thing, Tom. You're looking for price to reach these levels. You just have a pending order there for a buy. For me, I only have one up at a time. Some people like having multiple ups. So we'll have like one entry here, one entry here, one entry here. So like 3 back-to-back entries, basically. And not one that I would necessarily recommend because obvious reasons. You're going to be over leveraging. The trade can easily go the opposite direction, but most of the time it does work out. So if you know what you're doing, you can have multiple positions, or if you guys want to split up your risk into multiple trades, you can do that as well. But you can see right here, price pushes up. This is the first area of liquidity. Price hits it right there. Full TP, second entry right here, full TP. Third entry right there gets hit. And this one is a full TP if you had a wide enough stop loss. So like, for example, here, you typically wouldn't, I mean, depending on yourself, for me personally, if I'm taking a trade like this and I know it's going to hit, I'm probably going to be using a 500 pip stop loss. I know it's not good risk reward, but I know what I'm doing. So I'm able to do this type of trade because I'm not going to get greedy here. I'm just basically having a safety net. If price decided to pull back, I don't necessarily plan on losing these trades. But you guys can see how it can be lucrative, but it can also be very risky. So like for me personally, I wouldn't have 3 trades open like this. I would just have 1 trade open. And then if I have an opportunity to enter a later trade, then I would take it. But some people will just have like multiple trades open. That's why you'll have like Kevin over here with like Kevin, which he'll have like 50 trades. This guy takes like 100 trades a day, which is crazy. I can't do that. That's like, it's just way too much stress on myself. I don't want to be on the charts all day. So I just have like maybe one of these. So of course I'm not going to be hitting like 60K days. I'll be hitting maybe like a, an 8K day or a 10K day, but I'm not going to be hitting like 70K or 60K a day. It's just too much stress, and then it really burns you out. So like like Kevin, he takes a lot of breaks. Sometimes he'll be like hot on the street, and then he'll take like a week break or a month break because it burns you out. So for me personally, I'd rather be consistent, making X amount of profit daily, and then trading every day versus getting burnt out on like one day and then not being able to trade for like a couple of weeks or a couple of months, because it's just draining. It's draining. If you're doing this right here, it's gonna be super stressful. So there goes another example right there. I'll see if price pushes through and reaches another area. So price pushes up right here. And let's see if there's anything else that happens over here. Okay, so there's another area of liquidity right there. Price hits the area. Another full TP right there, right? So another area of liquidity right there, another full TP. Another area up there. Let's see if price pushes up to this area. Another opportunity for liquidity push. Kenneth, this strategy is the liquidity push. So you probably don't remember this strategy is not on the course because I don't really teach a strategy, but I'll be marking it up on the lives because a lot of people have been asking about it, especially a lot of the older members. I think you were around, Kenneth, because we did apply this a lot, like I think last summer or 2 summers ago. It's just a really risky strategy because you have to like be aware of like what's going on the chart. So again, right here, this is going to be playing out again. Let's see. Again, right there. So you see 2 back-to-back full TPs. It's just liquidity pushing past these areas. Like, yeah, technically you can ride this and then go to the next zone, but it's just too risky if you take a trade like that. It's better to just get in and out quickly. Yeah, just skip them for now, Kenneth, and then watch me do them on the live session. I'll analyze them and post them up so like you guys can see, but I probably wouldn't recommend applying this because you will make a lot of money trading this, but you can also blow an account in like one trade if you end up like over leveraging. So I wouldn't really recommend it for majority of people. This is for like the more advanced traders in the group who actually know how to like, read the charts and don't really need much help. They're basically just using my zones here for entry, but they don't really need help identifying, where to make entry, where to make exit, because they typically know what to do for the most part. But yeah, so there goes an examples of the high-low, or sorry, there's no high-low, the liquidity push. We're just going to call it liquidity push. There's no specific strategy to it. It's just what we're going to call as liquidity push because I don't want people to like get too hooked on the strategy. It's easy to get hooked on the strategy because it's really lucrative, but last thing I want to do is see people blowing accounts, taking, too risky trades and over leveraging. So, all right. Looks solid. I think that's it for that, Tom. I don't know if you have any other questions regarding the strategy, but that's pretty much it. I'll be drawing this up every morning. So just come on the live sessions. I'll have a separate chart dedicated just to liquidity pushes, and then we'll have them marked up. I'll identify them and I'll let you know if I'm taking them. Or maybe I won't because it happens too quickly. That's like one of the complaints that we had a lot when I was applying the strategy. People were complaining because they didn't know when to get in. I like explained what I was doing, but like people would complain because they wanted like a for sure set in stone requirement, which it can give for this specific strategy. So I'll mark it up for you guys and you guys will see it, but I'll try to let you guys know if I'm taking the entry or not. Sometimes it just happens too quickly. And I set a buy stop or a sell stop and it automatically triggers and I'm in and I'm out. All right, Tom, no problem. So let's scroll down real quick. So we have Alexander over here. Alexander said, hi, Sean, I have one question. I see the high-low momentum scalp can sometimes be aligned with the opposite strategy, momentum failure. If all requirements are met on the high-low scalp and momentum failure, the only difference would be volume. That is... so they're kind of different. I mean, they do work in conjunction. Like you can use... there's a lot of strategies that work in conjunction, right? So a lot of the strategies that I apply, they all work the same. Like the V1 variations, they work hand in hand with the high-low momentum scalp. Let me see if I can find an example over here. All right, let's see if I can find one over here. Let's see, price was bullish pretty much all morning, so I'll see if there's any bullish entries here that came up. Okay, so I think there was one. There's no example here, but I want to show you an example where it aligns. So let me continue reading your question, Alexander, and then we'll continue. So let me see. I just want to make sure I don't miss anything. Follow requirements are on the high-low momentum scalp failure. The only difference would be volume. Would you suggest taking a high-low scalp if the volume is higher than average, and take failure if the opposite direction? Yeah, no, I actually would. So I never really thought about it that way, Alexander, but that does work well. So like, I wouldn't necessarily say that they're aligned opposite for, well, I mean, you're kind of right, because like, for example, today, like the sell, remember the sell that came up? I was like, okay, I'm not going to take that trade. It didn't actually close, but if it did close, I think there was a sell signal over here that was like pending or something like that. And then it ended up reversing. I think it was this candle right here at 642. So there was an actual sell candle right here that didn't actually close. We were waiting for it to close, but it didn't close. So that would be an example of like one that you would, typically take. If you turn on volume there, the volume was actually perfect. Yeah, the volume was below average right here. And there was a pending sell signal right here. So if you guys remember during the live, we were waiting for this to play out. But the reason why I wasn't comfortable with it was because of the overall bias. The bias for the buy was just super strong this morning. So it doesn't necessarily work every time, Alexander. Like for example, right here, here's one that actually works out, but the volume is below average. So I probably wouldn't use those hand in hand. I probably wouldn't use the momentum scalp failure. I personally don't like that strategy too much. CT introduced it. It's a very lucrative strategy if it works, but I think it's too risky because you're going against like such a strong trend in some instances. So like, for example, right here, there's a high-low momentum scalp here, right? There's a higher high right there. There is a sell signal right here, and then volumes below average. So this right here actually fits criteria for a momentum scalp failure, but this also fits criteria for a high-low momentum scalp. So as you can see over here, it looks like the trade does actually play out. Yeah, so the trade actually does play out. So I guess it would work here in this case, Alexander. For me personally, I probably wouldn't take it. I never even took the strategy when we were applying it during that period because I just didn't. I used it as a confluence more so as a standalone strategy. But like as you mentioned, it does work well here. But I probably would have taken the opposite. I would have actually taken the. You probably could have taken both. Actually, you could have taken like basically a 2-for-1 here. You take the high-low momentum scalp off the sell signal, and then catch this as it comes down. So it does hit TP right there. It hits TP for both directions. For the high-low momentum scalp. Actually, this is the one that we took, wasn't it? Yeah, so this is a trade that we took here this morning. That's one that hit slippage, and I made like way more profit. I was supposed to make 2,000 on that trade. I made 3,860. So this was a trade that we actually took. But I think someone else in the group mentioned, I think CJ mentioned actually that this was a, or I don't know if it was CJ or somebody else, but someone did mention that this was a momentum scalp failure, and they actually took it for the buy. They made profit, and then they took it down for the sell. So yeah, you might have something that lines up, Alexander. So it looks like it is something that can work. Let me see if I can find another one here. Yeah, so maybe volume would be a good thing to add to the criteria. This is a trade that I missed. I actually didn't even see this one. If you guys remember, we were kind of discussing, and then all of a sudden this candle just shot up. There's another high-low momentum scalp right here. There's a lower low buy signal right there, and then that right there was a clean entry for a buy. I don't know if anybody took this trade, but I missed it. But it like literally went straight to TP. So this right here, volume was above average. So volume is useful. It's very useful. I don't know why we stopped using it. I think I just took it off because it made the chart look kind of messy. But again, right here, another example. So here is a momentum scalp failure right here, but this one actually doesn't play out properly. There's a higher high right here. There's a sell signal. The sell signal is not a high-low momentum scalp because it doesn't break and close below the pivots right here. but price does end up crashing lower. So I wouldn't necessarily say, I mean, I probably wouldn't recommend using the high-low momentum or the high-low momentum scalp failure, sorry. Unless like you're really comfortable with it, Alexander. Because like, for example, right here, this looks like it could have been a good entry, but it doesn't. It actually goes completely down. So the one that I would probably use in conjunction with the high-low momentum scalp would be the V1 variation. I think that one is actually a good confluence for a V2 or a V1 variation, because that's typically what I use for the most part. So let me see if I can find another example here. Sell signal. So I wouldn't have taken this one here, obvious reason, because, well, there was no entry there to begin with. There was a high-low in between. I remember looking at that during the live session. Let's see. Nothing there. Wait, does this play out? This is too late in the session. So this is already past 8. I probably would have avoided that because the bias was so strong for a buy. You can see where price pushes up right here. Okay, so here's another example right here. So the way that I would typically do it, Alexander, is I would use this as a confluence. I would use a V1 variation, or you can even take the V1 variation if you wanted to stand alone by itself. This here is a little risky because the bias was very strong for a buy. So this technically would not be a V1 variation. I discussed this during the live session today. One of the criteria that a lot of people skip is the overall bias. Overall bias for today was very bullish. So I probably wouldn't have taken this trade here, but you can see that there's a higher high right here. And there's also a double body rejection, right? So for example, right here, this is an example of an entry for a V1 variation. It's not a valid V1 variation because the bias was bullish today. But if you were to apply this like without that criteria, this is one confluence of a V1 variation. So that's one confluence right there, right? It already hit TP. That's one confluence right there. If you wanted to take the V1 variation, you could have taken that. And then right here next is a momentum scalp, high-low momentum scalp. So there's another entry here because there's a higher high right there. A sell signal that breaks and closes past pivots 1 and 2. And that's where you make your entry right there for 100 pips. So you basically go for 2 right there. So this is how I would apply it, Alexander. I just never was a fan of the momentum scalp failure, so I don't really like taking that trade to begin with. But if you like it and you feel comfortable with it, then, you know, go ahead and apply it. I know that strategy works well, but there's times where it doesn't work very well. So that's why I don't really like to apply. I like applying strategies that work well, like majority of the time, versus where there's like a time where it works well and a time where it doesn't work very well. Let's see. Yeah, exactly. So yeah, Alexander said, but they're opposite to each other. If high-low momentum is a sell. So that's the thing too. So like what Alexander mentioned too, he said they're opposite of each other. I would probably not lean towards those types of strategies because you're going to be biased in one direction or the other, right? I typically like strategies that complement each other. So like, for example, if I'm looking for a V1 variation, I'm looking for 2 trades that go in that same direction, because this kind of just benefits me in both ways, right? So like, for example, here, this is going to tell me a price is going to come down. This is one confluence. And then I have another entry here. So I have a double confluence here. If you're using 2 strategies that are opposite, then you're kind of going against your bias, right? Like you don't really have a bias at that point, because you're like, okay, price can go up, but then price can come down. So like, for example, right here, Alexander, if you were to see like this entry right here, you would have gotten burnt because you have so many conflicting biases, right? So like, for example, the V1 variation over here would indicate price is going to come down. It's a reversal pattern. And then you have a sell signal right here and it's crossing below. So you already know this is a high-low momentum scalp. And then say, for example, you're looking for the sell there, but then you look down and you're like, oh, volume's below average. You're just going to confuse yourself, right? So I don't really like using those types of strategies where like I have a backup. Like whenever I trade, you know, I never have a backup. Like whenever I trade, I tell you guys, I'm going to take this entry. And that's pretty much it. I'm like, okay, I'm taking buys here or I'm taking sells here. I never analyze it where I'm like, okay, I'm going to take a buy here, but if something else happens, I'm going to take a sell. Like I never do that, because if you start to do that, you're going to start to think too much. And when you think too much, that's usually where the mistakes are made, right? It's like what a lot of people call analysis paralysis, right? You're going to think too much about trades going in one direction or the other, and then you're just either not going to take a trade or you're just going to freeze up and take the wrong trade. So that's my 2 cents. If it works for you, Alexander, then use it, right? There's no one way to trade. I know a lot of people who do trade that way, like how you mentioned, they do a lot of arbitrage. But I personally, it just doesn't work for me, because like when I take a trade, I want to be super confident about it. I don't want there to be any backup. Like there's no plan B for me. It's like, if I'm taking the trade, I'm going to take it. And if I lose, then I lose. If I win, then great. But I don't like having a backup, because I've seen a lot of people like happen like this before, where they'll take a trade. Or this is actually a better example over here. Where's the trade at? It was the one that happened during the live. I think it was this one right here. So this is what I see happen with a lot of people. And this goes back to what we just discussed, right? So like, for example, here, this is technically a sell entry, right? But if someone took this for a for a buy, so what happens here a lot is people will enter a trade and then they think price is going to come back down. So they're in a buy right here. And then they say, for example, I mean, say like maybe price, they entered late, price didn't hit their TP, right? So, I mean, price should have hit your TP, but if it didn't, I see this happen with a lot of people. They see price come down and they're like, crap, they get stopped out. And then they try to flip their trade because they don't have a bias. So they're like technically supposed to look for a sell, but they try to do the opposite here and they end up taking a loss. And then they try to do the opposite again right here. And then they end up taking a second loss, right? That's why a lot of people get in trouble with like revenge trading and over trading, because they try to flip the trade. So like, for me personally, if I ever lose a trade, I'm typically done for the day, because I don't really lose trades very often. So I know if I lose a trade, either my trade psychology is off or the market's just not working in my favor. So that's like my cue to like basically stop trading for the day. So yeah, Alexander, I mean, for the most part, if it works for you, apply it. If not, then I would probably remain and stick to just having one bias for the most part. Because if you have two biases, you're going to make mistakes. You're not going to be sure about any of your positions that you decide to take. Let's see, Alexander said, got it. Thank you, Sean. It's just, I'm looking for a high-low scalp, and then I see a momentum failure. It makes me hesitant to take the trade. Yeah, and I agree with you too, Alexander, 100%. So what I would recommend is to just look for multiple confluences in your favor versus looking for something else. Because if you look for the opposite confluence, then it's going to kind of throw you off. Like you could be set to take buys all day, and then you see something that tells you to take a sell, and then you're kind of hesitant about taking a buy when you should be looking for that specific direction. All right, so let me scroll up real quick and let me see what other questions I have here. Let's see, Barty's asking, or he mentioned MFF lag, Sean. I was in a buy and TP hit for 20 pips, but I saw that my profit was showing me more than 50 pips, but gave me 20. Yeah, no, they do lag, Barty. I've seen that before. It happens with me too. It happens in my copier, like it's crazy. It'll close out my trades on my, like, look at the slippage over here. The slippage over here is crazy. So like, it was one of these trades here that we took, and the slippage was just super off. It was, I think, it was like the second to the last trade. So you can see over here on my F2MO, I locked in 1,620. I know it's double, but so this was supposed to be 1,000 basically for my MFF, right? And you can see over here on my MFF, it only gave me 360. So it should have gave me at least 500, half of the profit, right? Or anything higher, because it was supposed to give me 1,000, but it only gave me 360. So yeah, MFF is known to lag. It does get kind of annoying, but as I mentioned before, guys, you can't really do anything about it. You just kind of have to deal with with their server issues and the excuses that they make, because I mean, technically are taking advantage of them by getting funded and getting payouts. So if you're successful trading, then you're actually benefiting from these funding companies. For the most part, majority of people aren't that good at trading, so they're actually benefiting off people who suck at trading. But if you're good, then there's just no reason to complain, because you're really getting you're getting the better end of the stick. Even though like they give you partial profit, or if they give you no profit, if they give you negative, then you're for sure, that's something to complain about. But MFF is still getting profits and they're still paying me out. So not too much I can complain about. Let me scroll up real quick and see if there's anything else that I'm missing. All right, so done with that question there. CJ said, yeah, he said he wants to thank Tom T for bugging Sean, as his profits has benefited starting to challenge tomorrow. Definitely, CJ. Yeah, if you guys are confident about your positions, just up your lot size. Don't over leverage though. So it's okay to up your lot size, but don't over leverage. That's a key thing. Martha said you didn't take anything after that liquidity push. You said there was nothing up there. Yeah, there was nothing on that other area there for today specifically. Let me scroll down real quick. All right, question from William. William's asking, I watched the videos to see the MT4 Trade Manager download. I am under the impression I can use it on MT4 for Hinko Trade. You can't. So it's an FTMO quick trade manager. It only works for FTMO, William. If you want to use it for Hinko Trade, you can use the depth of market tool. It's a different tool. It's similar, but it's just not as what is the word? It's not as useful in a sense, because for the DOM, the depth of market, you can still set your automatic TP stop loss, but it's not going to show you how much you're risking. So like on my FTMO quick trade manager, it'll tell me, like, I'll put my lot size and I'll put my stop loss and my TP, and it'll say how much I'm risking and how much I'm going to profit. But on the DOM, it's just a plain box. So you can use the depth of market. It's built in. Just look up the YouTube video. There's a lot of videos regarding it. I don't know if I had made a video on it, but I think it's probably easier for you to just look it up on YouTube. Let me see if I can pull it up. So you said you're on MT5. So if you just go to YouTube, you Google depth of market MT5 or MT4, there's a bunch of videos here explaining how to use it. So if you just go over here, what is depth of market? You click on that right there. I think this is the video I sent to most people. This video will show you how to use it. It's the same tool. It's just, it's not as detailed. It doesn't show you how much you're risking. So you have to know what you're risking before you enter the trade. Like you have to do the calculations yourself. But it's the same thing. It's like, I hate these ads, man. These ads are annoying. It says the video will play after the ad, and then it shows me another ad right after. All right. Video's done. Okay, so yeah, this is what the depth of market looks like, William. In the middle, you'll put your lot size, your stop loss on the left, and then your TP on the right. So I'm not sure what it looks like on your end, because I don't use it on MT5. I also don't use it on my personal accounts. I only use the FTMO quick trade manager. So if you want to use this right here, you just set your lot size in the middle, your stop loss on the left, and then your TP on the right. I'm not sure exactly what your TP stop loss would be, because I never trade on my main account for my personal Hinko account. I would always trade on my FTMO, and it would just copy over to my Hinko. So I would always use my Hinko as my secondary. But it's the same difference. You put your lot size in the middle, TP stop loss, and you just hit buy or sell, and then it'll enter your trade and automatically set your TP stop loss for you. So basically it's the same concept. It's just less detailed. Let me see if I can find a video of the quick trade manager. Yeah, but for the quick trade manager, you can only use it for FTMO. They've locked it, so you can only use it if you have an FTMO account. link to it. Okay, so I think there's a video here from FTMO. You know, I like how FTMO, they're like more focused on like making you a better trader now. They're not like any like these other funding companies who like mainly just want to get you to sign up. So you can see right here, William, see how it's different? So right here, this is what the quick trade manager looks like. You can put your lot size on top, you can put your stop loss TP, and then below it, it'll show you how much you're risking and making on it. Then you have a trailing stop loss here as well, break even, offset, etc. And it'll say your spread. There's more details on the FTMO quick trade manager. It has pretty much everything on here. So you use this compared to the DOM. The DOM is just lot size, TP, stop loss, buy or sell. And then this one right here gives you like a lot of different options. So that's why I prefer it. If you want to use it, but you don't have an FTMO account, you can always create an FTMO trial account, and then you can just set up your to use the tool, and then use your copier to copy your trades to your Hinko account. That's like one way of doing it. There's a lot of different, there's workarounds for it, but yeah, if you don't have FTMO, you can't use this tool for it specifically. William's asking, so I can be logged in my FTMO and trade copied to all my other accounts? Yeah, you'll just have your FTMO account as your main account, your master. So it doesn't matter if it's a trial, you can still have it as your master account, and then you just have it copied over to your other accounts, whether it's personal or other funded accounts or whatever it may be. That might be a better option for you, because I really like this tool. I think the tool is very useful. It's worth it for me, like personally, because it tells you exactly how much you're risking. So you already know how much you're risking, how much you're going to make per trade. So it does, it makes a big difference in my personal opinion. Yeah, so William said, okay, sounds good. I'll buy the social trader now and hook them up. I need to be using the tools as you do. Yeah, I mean, I'm all about making things as simple and streamlined as possible. So like whatever I'm using obviously works very well, because that's how we make all these profits every day. I just hit buy, sell, have my TP stop loss set up, and I don't really have to worry about too much. So it just makes all the difference. Whenever you trade, you want to make things as simple as possible, because if you have too many things going on, it can cause a lot of issues with the execution of your trades. Yeah, no problem, William. If you have any other questions, feel free to put them down. Let me see if there's anything else here that I'm missing. And they do have it for MT4 and MT5, William. So the links that I gave you should work. If they don't work, let me know, and I can try to pull it up on a different, because you can only get the quick trade manager if you're, well, I don't know, before it was only if you were funded. I think now you can get it if you're in a challenge, but before it was only if you're funded. So what I did was I downloaded all the files and then I put it on the course. So if you guys go over to the course, I pretty much downloaded the files and I put them there for you guys, because you can't get them unless you have like a paid account or if you're like funded. So if you go over here, you go over to where did I put it at? Yeah, right here, MetaTrader 4 platform, common tools used, and I pretty much downloaded it. There's a download file folder right here, because it's not available to everybody. Before it was only for funded traders, but I think they've opened it to challenges as well. All right, let me see if there's anything else here that I'm missing. So we're all done with that question, William. If there's anything else, just let me know. CJ's asking, I'm starting a challenge tomorrow. Was wondering if you check the trailing stop loss, break even, or offset boxes. So I don't. Make sure that they're unchecked. So when they're checked, on my screen, I'm on a Mac CJ. I'm not sure how it looks on a PC, but on my screen, if they're checked, it means that the box is disappeared. It's like clear. If it's unchecked, there's like a box around it. I wish I could show you my screen, but whenever I move my MT4 over, it corrupts the file, because I'm on a Mac, so it's not an actual application, it's on Wine. So I can't really show you my screen, but that's kind of the case. So yeah, just make sure trailing stop, break even, and offset are unchecked, meaning that there's a white box around it. Because if they're checked, I think that's what happened with one person in the group. They kept like losing trades at break even, and it was because they had break even checked off. So like whenever price went to break even, their stop loss moved up to break even, and then they had to cover the spread, so they ended up losing. So not one I'd recommend for scalping, because it moves super quickly. You can easily get like knocked out if that's the case. All right, question from Kenneth Her. So Kenneth is asking, he said, what's up? Finally able to make the live mentoring session. I'm sure you already went through this in the past mentorship, but I was curious if you can do a quick walkthrough of the steps when you enter a trade. So, hey Kenneth, what exactly do you want me to show you? Because there isn't really much steps. I just hit buy or sell. So there's no specific. Is there a strategy that you want me to show you, or are you asking like literally how I enter a trade? Because the way I enter a trade is I have the quick trade manager like this, and I just hit buy or sell. Like that's literally how I enter a trade. I have my TP stop loss set to the fixed TP stop loss because they're always the same. It's 300 to 100. So this will be 300, this will be 100. And then if I'm looking to enter a trade, I just hit buy or sell. Like if that's what you mean, how to enter a trade, literally, that's all I do. I just hit buy or sell. But if you want me to show you a specific strategy, then let me know what strategy and I can show you the steps. I think that's what you mean, or I could be wrong. I'm not sure. Because your question is, if I can show you the steps when to enter a trade. Not sure if you mean that in a literal sense or if there's a specific strategy you want to see. Because if there's a strategy, you can let me know the strategy, and then I can show you. Because there's like 30 strategies, so I don't know which one you want me to show you. I can't show you all 30 today. It's just a little too much to cover. But I can show you, one or a few strategies if that's what you want to see. So yeah, Kenneth, or Kenny, sorry. It's weird calling you Kenneth because I know you as Kenny. Just let me know like a little more detailed, like what you want to see, and then I'll show you whether it's a strategy or, because what I do here is I use the quick trade manager. This is what I was kind of discussing with William. I have everything set up here. I have my lot size set to 200, have this set to 300, have this set to 100. And then when I have the entry that comes up, I just hit buy. Like for example, today I took a couple buys here. And, I just hit buy or sell pretty much. And then it does everything for me. So I don't have to worry about it. So I'll wait for Kenny to provide his response. If you guys have any other questions, feel free to put them in the chat. Otherwise, I'm just going to wait on Kenny to see if there's, a follow-up on what he wants me to cover. Let me check my messages real quick. See if there's anything else here. Gotcha. Okay, so Kenneth said, okay, I got you. I've been studying the strats for the other vids, but I was just curious if you did anything different than hit buy or sell. Oh yeah, no. So basically, Kenny, if all the criteria is met, then I just hit buy or sell. So like, for example, like today we had that sell entry, right? Well, I mean, sometimes it's different, Kenny. So like sometimes I'll miss the entry. Like, let me show you the entry that we had today. I think it was this one right here, right? At 654. So there was an entry right here. And the thing with this right here, Kenny, was that, so this trade came up right here, right? But it happened so quickly that I missed it. So there's going to be some instances where I do some like stuff a little differently. Like, for example, here, this entry came up and then price kind of retraced up a little bit, right? So when price retraced up like this, since I missed the trade here, the trade was still technically running. I was supposed to enter the trade right here, right? So generally, if I see an entry come up and I wait for it to close and it closes, then I just hit sell and I'll be in the entry already. In some instances like this, where I kind of missed the trade because it happened too quickly, What I do here is I set a sell stop. So this is another way of entering a trade. I can't show you on my MT4, but basically what I'll do is I'll just have like my clicker right here. I'll right click and then I'll say like trade. You can't see it on here because this is like back in time. But if you right click, it'll say trade here. And then you can have like a sell stop or a buy stop, or it's just a pending order. So typically what I would have is I'd have the pending order right there. So when price comes down, right here, which ended up coming down around news time, I think. So when price came back down, like right here, it would automatically fill my order and then go straight to my profit target and close me out. So that's the sell entry that I took over here. That's a sell entry I took right there. And then I made like a huge profit because it ended up, getting concept slippage, which was in our favor. So I had the sell entry there. It automatically filled my order, and you can see the green strip here because it closed out my TP. So there's a couple different ways to do it. I don't have any specific video on setting pending orders, but you can always look it up on YouTube. So you can just look up MetaTrader 4. And there's a lot of videos here showing you how to set a pending order on MetaTrader. But I probably wouldn't recommend you do that on a real account. So try practicing it on like a demo account or a trial account first to like get comfortable with it, because it's not that easy to do. It's hard like the first couple of times because it's really quick. Like you have to like click on it, go to trade, click buy stop, and then or sell stop, and it'll set your order there. And then you have to double click on it or right click it and then edit order and then put in your parameters, because it doesn't automatically set your TP stop loss. You would edit the order and then say, for example, here. So say, for example, your order right here is for 34,269, right? If your TP down below is like 10 points, you're just going to change it by 1, right? So it's just, you got to do some math, but it's not too difficult. Like your entry point right there, and I'll just tie it up right here to make it even simpler. So entry is 34,269, right? That's what your entry is, right? Your TP is, so what's your TP, right? If you wanted to do your TP and you're going for a sell, you just need to subtract it by 10. So 34,259, right? You're just basically changing it by like one number. So you got to do a little bit of math. I know it's kind of annoying. I don't like doing math myself. That's what you do. And then for your stop up here, you just, instead of subtracting by 1, you're going to add 3 or 30. So 34,299. And that's going to be what your TP stop loss is. So it's a little, I mean, it's a little tedious and it might seem a little complicated, but once you do it a couple of times, it's going to be really easy because you're just doing a quick, easy subtraction and addition to it. So if you're going for a sell, your TP is going to be subtracted by 10 points. If you're doing a buy, your TP is going to be added by 10 points. So I would recommend probably opening like a trial account or a demo account. Play around with it if you want to try to do those types of orders. But if it's too complicated, then I recommend just, if you miss the trade, just skip it, because odds are it's probably gonna hit your TP right away and you're just gonna miss it. So yeah, that's the next step. So if you've already got down like entering the trades right away, hitting buy or sell, then you're good. You can probably practice trying, pending orders. But if you haven't really gotten that stuff down yet, I wouldn't recommend moving on to the next step yet, because it's going to screw it up and you're going to it's going to get confusing and you're going to not know which type of order to use. I personally like just entering right away, because when you enter right away on the quick trade manager, it automatically sets your TP stop loss. So it kind of does all the work for you. Yeah, let's see. So Kenneth said, thanks, man. I was mainly confused about how to use a copier. I thought you might have entered a trade differently since you use a copier. Oh, no. So I do the same thing. I just buy or sell, Kenny. And then with my copier here, so you can see my main accounts right here, right? My copier is right here. All it does is it copies exactly what this account does. So if this account buys, then this account buys too. If this account closes, then all of these accounts close. So you don't have to set a TP stop loss or anything like that. Whatever this account does, literally all these accounts copy the same thing. So if you're hitting buy, it pretty much hits buy on all 4 other accounts that you're trading on. And then when you get out of it, it does the same thing. It'll automatically close on the other accounts as well. So it's pretty straightforward and simple. you just have to do it yourself. Once you do it yourself and you see it in action, it'll all make sense because it's really not that difficult. But all right, Kenneth or Kenny, if there's any other questions regarding that, feel free to chime in. Otherwise, I think that's pretty much it with that right there. Let me check over here real quick. William's asking, to further his question, you're literally watching your screen for entry and pressing buy or sell at the same time of entry, and your trade manager does the remainder. That is correct, William. So I'm just hitting buy or sell. Once you hit buy or sell, your TP and stop loss will automatically be placed. So you can do that. And then if you want to close out early, you can always just close out of the trade early. Like a couple of my trades here, I closed out early. Like this over here, it was like at TP and it wouldn't close out. It was already at 2000 and I just ended up manually closing it. And it still gave me 2000. Same with this one right here. It was like kind of dancing around like a TP area. And I just like manually closed it out. Because, when that happens, I always tell you guys not to get greedy. If it hits your TP and you're not out of it, just pull out of it, whether it's for a small win, small loss. It's better to pull out and be safe rather than, praying that price is going to come in your direction. Because when that happens, typically it doesn't play out that way. All right, so let me scroll up real quick, see if there's anything else that I'm missing. All right, Kenneth is asking, and this is another Kenneth. So I'll call Kenny on the YouTube Kenny, and I'll call Kenneth because it's two different Kenneths here. So Kenneth is asking, does trend direction matter in the high-low momentum scalp? It does not, Kenneth. So it's not really necessary. But for me personally, depending on how the market's moving, I would probably move in the direction of bias. So like, for example, today the bias was super strong for a buy, right? So I was hesitant to take this sell right here. The sell came up, but then I was hesitant to take it. So I didn't take it right away. And then what I did was I just entered the sell stop here, and then it entered me in a little later. So you technically don't need the trend for entry for the high-low momentum scalp, but it's really by a case-by-case basis. Like for me, I've done I took the spreadsheet off, but I've done the testing, and the strategy works well over time. So I took trades like against the trend and for the trend, and they work well. But me being a perfectionist, I typically don't want to take trades that are unnecessary. So if I know a trade's really bad or it doesn't look good, then I'm not going to take it. But if it looks good and it's against the trend, I would still take it. Like for this one right here was against the trend, and I still took it anyways, even though it was super bullish. Let's see, CJ's asking, so for buy stops limits, do you use Quick Trader? No, I don't, CJ. So unfortunately, I wish there was a way to do it where you can set a pending order and then have a TP stop loss automatically set up, but that's not available on the Quick Trade Manager tool. So when I'm doing pending orders, I don't use the Quick Trade Manager. I just do the math like by myself, and then I edit the order manually to set the TP stop loss on there, which is not too difficult. It's a little different, but it's not too difficult to do. All right, next question is from Andy. Andy's asking, hi, Sean, can you review the SR rejection strategy? Yeah, definitely. So let's go over here to this chart. This chart's going to be strictly for the SR rejection scalp strategy. Let me see if I could find any over here. I think there was probably some that came up later in the session. Okay, so I think there was one over here. Yeah, no problem, Kenneth. Glad I could help you with that there. All right, so I think we have one. I mean, the market got kind of wacky, but I think we could probably find one over here. I see one right here. It's not the best entry, but because it's so late in the session, but it works. So let's go over here. We're looking for sells here because the bias here is bearish, or the trend is bearish. So looking for a sell here, we're going to go to the sell requirements. So first, you want to confirm that you're trading the direction of the trend using the trend meter and making sure that pivots 4 or over 3. Basically, you just want to make sure that the red pivot is above. So if the red pivot's above, that's going to indicate that price is bearish. The trend meter down below is also red, so you can pretty much assume that it's bearish. That's going to be step 1. Step 2, you want to identify a top wick rejection off the K2SR zone. So in order to identify these zones, guys, you turn on the SRV2 indicator. So This is what the chart looks like without the SRV2 indicator. When you turn it on, this is what it looks like. It's a little bit messy. So what I typically do is I just pull over to the right or to the left over here, and I draw the zones myself. So I'll get the rectangle tool right here. I'll get the magnet tool to draw perfect zones, and I'll draw a zone right down here. So I got that zone drawn right there. Once I have this drawn up, I already know where the zone's at. So I'm just going to turn the indicator off to clean it up. And you'll see that we have a perfectly lined up zone right there, right? So going back to this criteria, first step, require that you're trading the direction of the trend. We already confirm it's a bearish trend because price is below the pivots, trend meter is red, pivots are angling down. That's going to confirm a downwards trend. Second, you want to confirm a top wick rejection off the SR zone. So you can see with this candle right here, there is a top wick rejection, right? And not only that it's rejecting off the SR zone, it's also rejecting off the pivot. So you kind of get a double 2-for-1. You get a double rejection here. Rejection off the pivot, rejection off the structure. It looks good. So right there, step 2, you confirm the wick rejection. Once you confirm that, you move on to step 3, confirm that you're trading in the direction of momentum. You look back at the most recent momentum signal. You can see right here, we have a sell signal. So this is going to confirm that momentum is going downwards, and this aligns with your sell. So you got a downwards trend, you got a sell momentum, you have a nice rejection off the zone over here. Let me go back to the second step. So you want to identify a top wick rejection off the SR zone with a moderate red candle. Moderate means that the bottom wick can't be bigger than the top wick, or even better yet, there's no wick on the bottom. So with this specific candle right here, this is actually a strong red candle. You don't need a strong one, you need a moderate one. But this right here would be considered strong and or moderate because there's a wick on top, which isn't really a big deal. This just indicates that price is pushing away from this area. But the bottom is really what's important because the bottom here shows that there's no resistance. If you look over here, when price comes down, look when there's wicks on the bottom side, price retraces up, right? So you don't want a wick on the bottom. Like this is a perfect type of candle right here because this right here is rejecting off the top, but it's not rejecting off the bottom. And with that said, you have all the criteria here met. I'll go over the requirements again one last time before we mark it up. Confirm you're trading the direction of the trend. Obviously, we're in a downwards trend here. Identify a top wick rejection off the SR zone with a moderate red candle. We have that on this specific candle right over here. Third, you want to confirm that you're trading the direction of momentum. We have a sell signal right over here. And lastly, you can enter on the open of the following candle. So right there, you enter a short position. You set that up for a 1030 split. You got that set up right there. You let the trade run. Kind of goes sideways for a bit, gets really close to TP, bounces around a bit, and it goes straight to your profit target. So there goes an example right there, Andy, of an SR rejection scalp. So yeah, if there's any other questions regarding that, Andy, let me know. Let me see if I can find another example for you here. Strategy is not too difficult. This is actually this is like a favorite strategy for a lot of people because like during the summer, if you guys have ever followed, or I mean, a lot of you guys have followed other traders, you'll notice that in the summer, a lot of people are not doing very well in trading because they don't have a sideways strategy. So that's why I worked like really hard to create this strategy because a lot of people don't have a ranging strategy. A lot of people only have directional strategies. And this one right here actually works very well, in a ranging market. So I'll see if I could find one more here. I don't think I'll find another one because I didn't really see much in the market moving too much. But if I do see one, I will give you another example. Yeah, let me see if I could find a buy example over here for you. All right, so this one over here is not a clean entry, but it is still criteria met. The criteria still meets over here. So one of the main reasons a lot of people don't like this strategy is because it's subjective in a sense. The subjective part is identifying a moderate candle. So again, right here, guys, you guys see the mess down here. I'm going to go ahead and draw my own zones. Got a zone right here. I'm just going to show you a buy example so you can see how these trades work, in the opposite direction. All right, so we got the zone over here. I'm going to go ahead and turn off the SR zone indicator. And let's look back again at all the criteria. So first, you want to confirm that you're trading in the direction of the trend. You can see the trend here is bullish because price is above the pivots, trend meter is green, pivots are angling up. This confirms an upwards trend. So we're going to be looking for buys here, right? So first step, confirm trading the direction of the trend. We've confirmed that here. Second step, you want to identify a bottom wick rejection off the SR zone with a moderate green candle. Looking for the same thing again right here. You can see this candle rejects off the zone. And you can see the wick on top is not huge, but it is a little big. So this is where it becomes a little tricky, because for some people, they want something specific, right? I can't tell you for sure if this is a moderate candle or not. For me personally, from my experience, I think this is a moderate candle. The reason for that is because the body of the candle is so big. The body of the candle is really big and thick, and the top is like not super heavy. So with that said, I would consider this a moderate candle in my perspective. So second step, confirm the bottom wick rejection with the moderate green candle. We have that right here. Third, you want to confirm your trading in the direction of momentum. Again, right here, we have a bullish momentum signal. So we know that we're looking for buys here. Bullish trend, bullish momentum, a nice rejection off the structure right here. Moderate green candle. Everything's lined up and everything's ready to go. Once you have that set up there, you take a long position, set this up for a 1030 split. You got that lined up right there. You let the trade run, and full TP on the next candle right there. So there goes another example right there, Andy. It's a pretty simple strategy. I think the main thing that might throw you off is just identifying moderate candles. My recommendation is, if you want to practice that, just go to a clean chart and just test yourself, right? So you're like, okay, what does this candle look like, right? Because you're never going to see a perfect candle. Like, these candles are always going to be a little different. Like this green candle, right? Does this look like a strong green candle? Yes, right? Because there's no wick on top. Let's go a little further. What does this red candle look like, right? Red candle right here. There's a rejection right here. At the bottom, there's no wick, right? So this right here would be considered a strong red candle. This green candle right here, right? There's a huge wick on top, which isn't really too relevant, but there's also wick on the bottom. Also, you look at the body's kind of small. It's the same size as the bottom of the wick. This is not considered a strong candle in my opinion. Something like this right here, right? This green candle. I wouldn't consider this a moderate or strong green candle, because the wick on top and wick on bottom is too big. So if that's something you want to practice, Andy, just go to a clean chart and then look at every candle and just test yourself. Okay, is this a strong red candle? Probably not, because there's no wick on top, there's no rejection, and then the bottom, there's a wick right there. So like basically the way that you're looking at this is you're going to look at like red candles, and then you're going to see if there's a wick on the bottom. And then if you see a wick, see if that wick is strong or if it's like smaller, or whether it's big. That's how you can determine if this is a strong candle. I consider this a weak candle because the wick on the bottom is a little too big for my liking. However, this green candle right here is a good candle because looking on top, there's like little to no wick on the top side. Yeah, exactly. Andy said, yeah, seems simple enough, but will require some practice. Yeah, it's all about back testing. Like all these strategies that I've created, I've been applying them live with you guys during real market conditions for like years now. So like for me, I don't really get nervous or scared when I see the entries, because I've seen these entries come up like, 1,000, like thousands of times. So for me, it's like second nature. I can see something really quickly, and I'm like, oh, there's an entry right there, like V1, V2, because I've seen it before so many times. Practice is going to make perfect. That's really what the thing is here. And if you put in enough work, everything will start to look and make sense to you super easily as well. All right. Barty's asking, when you have this sell signal, then you don't enter right away. Sorry, Barty, I don't even know what you're talking about. I think you probably put that question in the chat like a long time ago. But yeah, what I'd recommend, Barty, is review the live session from today, because you'll see when that entry came up. So I think you're talking about the sell entry that we took earlier. I would recommend just reviewing the live session from that day, because that live session will show you my thoughts live. It's different for me to explain it to you here because I've already seen it happen. But if you see my thought process when it was happening like live, you'll see how I was actually thinking about it when it was actually happening. I think that'll help you more, because when I'm on the live session, you got to think on your feet. Like right here, I can kind of change my analysis a little bit. I saw it already, and I'm like, I think this is what you're talking about. Like, for example, right here, there's a lot of reasons why I would take this trade and why I wouldn't take this trade. But I think you get a better understanding if you watch the actual live session, and then you see my explanation while it's actually happening, because that's where the real thoughts come out. Like right here, I can give you a perfect explanation of whether I'd take it or whether I wouldn't. But my thoughts during the live session are going to be like raw thoughts. It's going to show you exactly how I thought, how my emotions were. how I executed the trade, how I felt like taking it, and how shocked we were when this big spike down happened. Because you guys remember the spike, we were all shocked when this happened. Because I was expecting to get 2,000 off that trade. I got 3,800. So I was like, oh, for sure, I'll take it. Because typically slippage doesn't work in our favor. So other than that, guys, if you guys have any other questions, feel free to put them in the chat. I don't really see anything else here. So if there's anything else that you guys want, we've been on this mentoring session for about an hour and a half. And I think we've pretty much covered everything. All right, guys. So I think that's it for today. If you guys have any other questions, feel free to email me or message me on Telegram. If you guys are new here and you guys want access to the strategies, as I mentioned before, guys, just go on the website, click on unlock your free access right here, and it'll give you access to all of the videos explaining pretty much every strategy I showed you here and every strategy that I've covered in the past, 5 to 7 years with you guys on these live sessions. Yeah, this is what the course looks like. It has pretty much every strategy I've created and shared with you guys. I think I've shared every single strategy. Well, not exactly. I have a lot of strategies that I've used in the past, but for the most part, all the strategies that I've tested and I know work are all listed on here, like about over 30 strategies on this course. If you guys want to rewatch any of the previous sessions, like what I mentioned with Barty over here, if you guys want to see how I reacted to these entries this morning, just go to our YouTube channel, youtube.com/KodiKaiTrades. Everything with a blue background is a previous live session. So just go back to the session from today, May 1st. You just click on that right there. And then you can pretty much pull up, the session from this morning. And you can basically fast forward to that entry we took. And you can kind of see, it's funny when I look back at my videos, because you guys can see how focused I am. This is the same exact entry that Barty was talking about. Like I was waiting for the entry to come up and then I missed it because it just ended up coming up too quickly. I waited for it to pull back. And then like a few seconds later, we were pretty much just waiting for it. And then what I had is I had a sell stop right there. And this is all real time. So like, whenever I trade with you guys, it's all real time. Price kind of bounced around a little bit. And then it spiked right there, I believe. Yeah, because price was kind of in drawdown, so I was tripping out a little bit, but then it ended up coming down super nicely. Yeah, I literally had everything marked up right here. So I was kind of just waiting for it. And then I was kind of showing you guys that I was like, okay, this is probably gonna come down from here. So I was just waiting. And then as soon as it hit 7 o'clock, that thing just like dumped. Yeah, we were waiting for right there. Yeah, because this is a very short-term move. It's only 100 pips. It's not necessarily like 1,000, like 1,000 to 500 pip move. So with this here specifically, I'm still looking for it to come back down. There's no entry. All right, it still hasn't filled yet. So I was just waiting for it to fill. I'll keep taking a look at this. I just gotta keep looking at it because I'm not sure when it's gonna actually fill, or if it even fills at all. I think we're just hanging out. Yeah, there's not really too much going on here. The range actually got tighter. So let me just update this cancel it, to be honest. It's getting really close to so I wasn't even in the position. I was like waiting for it to fill, and it finally filled. Oh, well, that was quick. Yeah, so you guys can see I wasn't even expecting that spike to happen, but I had my pending order there. It filled it, and then it went straight to my TP. So that's basically what you guys can do. If you guys ever want to rewatch the session, just go to the YouTube channel, pull up any session, and just watch them. I think if you guys study the live trading sessions and these mentoring sessions, you guys will learn way more than looking at the course, because I cover everything in detail and I give examples. So, all right, guys, I think that's it for today. If you guys have any questions, feel free to reach out. Otherwise, I will see you guys back here tomorrow for the next live session. So, all right, guys, have a great rest of your night, and I'll